Hello, everyone. I'm Peter Rawlis with Avalara, and thank you for joining us for today's webinar, How Selling Through Multiple Channels Impacts Sales Tax Obligations. Today's webinar is brought to you by Celerant and Avalara. We are recording today's presentation, so you'll be able to come back and rewatch this on demand once we email you the link in the next 24 hours. Before we get started, I wanted to quickly go over the console in front of you. If you have any questions throughout the webinar, please feel free to submit them during the presentation in the chat box to the right of this media player. We will set aside time at the end to answer your questions. We also have a copy of today's presentation slides in the handout section, so be sure to download that for your reference. And I will share that right now. So over in the handouts tab at the top next to your chat, you can download today's presentation slides. Joining us today is Oliver St. George and Jeffrey Lutters from Avalara, and Michelle Salerno, who is the Marketing Director for Celerant. And with that, we are ready to get started, and I'll pass it over to Michelle.
And thank you, Peter. Welcome, everyone. Thanks for joining us today. I'm sure many of you know me already, but for those of you who don't, Michelle Salerno, I head the marketing team here at Celerant, work out of our New York office. And so we have been partnered with Avalara for quite many years, actually. And so this is not a new integration, but it's a very important integration. And as tax rules are changing, and so many of you on the call today are selling online and selling into different areas throughout the country, this topic becomes more and more important. And especially now, given that everyone's preparing for hopefully their very busy holiday season, it also becomes even more important. So, and with that, I would like to introduce Oliver. Oliver is our partner manager, and he'll speak on Avalara.
Thank you, Michelle. We've got some great content for you all today. I think we can just, get started. So I'm going to pass it over to my colleague, Jeffrey Lutters, to kick us off.
Thank you all for joining today for this session. What are we going to talk through? So the idea is that as you as a company, as you sell through multiple channels, there's just implications, especially around sales tax. So we're going to unpack that today and kind of what that looks and feels like. So before I hop into that, let me explain who I am. So I have been in this world for almost 15 years now, helping companies automate sales and use tax. And so companies across all different verticals, across all different industries. And what that's given me is a unique perspective about trends that we're seeing out there, how companies are dealing with these challenges. And so I'll lend some of that insight into our conversation today. So let's walk through the agenda. So first off, we want to think about some recent shifts. So how people buy, where they go to buy has seen some pretty dramatic shifts over the past couple of years. And so we're going to talk through kind of where we find ourselves today and certainly how companies are aligning to those buying habits. We're also going to talk through as a company goes to meet these customers in different channels and starts selling through different channels. What does that look and feel like for a company to try and stay compliant through all of that change? Now, as we're thinking about these different channels, we're going to unpack what those are and certainly what that may mean to a company and what you need to think through across these different channels. And we're also going to think through the 5 different steps for proper tax compliance. And of course, some recommendations on how to optimize that process for us. So let's hop into it. So when we think about consumer shopping habits, the first thing that we can all think about is, over the past couple of years, there's been a dramatic shift to people buying online because I don't want to go into stores for numerous reasons. And interesting for me, as I think about, as we exit that, I thought maybe it would shift more toward being back in store. But when we look at the beginning of 2022 versus that same quarter in 2021, we still saw an increase of over 6% in overall sales online. And that really goes to show that shopping habits have changed and people are more comfortable buying online. In fact, you'll see in that big orange box, 63% of the shoppers do their purchasing online. That's a huge number. That's a lot of individual consumers. That's a lot of money. That's a lot of items that can be sold. So a lot of what we're going to talk today about multi-channel is really companies going after that 63%. And you'll see kind of on the second bullet on the left-hand side is that we're seeing this increase across the board, across these different channels as companies move into these different channels. And as you move into that, there's going to be implications and ramifications of that. And that's definitely what we'll unpack today during the session. But let's talk about that 63% of shoppers and some of the numbers that line up to them. And these are some pretty big numbers. So as we look at 2022, $27.3 trillion for global retail sales. Of that, $1 trillion for e-commerce sales. Again, 9% growth for that. But the interesting thing for today's conversation is that 190%. And that's the revenue generated by businesses through multiple channels. And that really goes to show that companies are looking to adopt different ways to go to market, to sell to customers, and of course, trying to get those dollars in those customers if they can. And then we'll talk a lot today about marketplaces. So that last piece of that 70% of global revenue coming from third-party channels. So again, if you have aggregation sites, think like your Amazons, your eBays, what have you of the world, where it's one place consumer goes to get a bunch of different products. And if you are trying to sell product, it makes sense for you to try and get on that marketplace to reach those customers. But there's causes that there's ramifications from that. So let's talk a little more about that. So Nexus is this conversation topic that we've all been talking about for many years. And so I think it's important to kind of start the conversation level setting that Nexus is the connection that you as a business have to a jurisdiction. So the idea is that you have done something within that jurisdiction, and now they expect you to collect tax on behalf of that jurisdiction. And that can be a state, that can be a county, city, what have you. And there's different rules in different states. And before we talk about kind of the new things that have come into place, I think it's important to call out the traditional idea of Nexus is still in place. And I kind of sum that up as people, place, or things. And so if you have people in a state, if you have product in a state, either in your warehouse or through a third-party warehouse, and there's things that you're doing within a state, that's still going to create an obligation for you. Attendance at trade shows, things of that sort can still absolutely create that obligation. And we'll talk more about this also on the marketplace side of it, but having your stock sitting in warehouses, kind of for Amazon, it's that FBA model where your product is sitting on warehouse shelves. It's still your product, but they're moving it freely amongst their warehouses. That can absolutely create an obligation for you. One thing I will save for later is the idea of remote employees, and we're going to unpack that a lot more because it's become extremely relevant with the disbursement of employees across the US and around the world over the past year or two. So if we have the traditional idea of Nexus still there, people, place, or things, within a state, that's going to create an obligation. But we also want to talk about the new era of Nexus. And so a few years ago, we had the Wayfair decision, but essentially the idea is that states can now mandate you having to collect the tax on behalf of that state, not for you having operations within a state, but simply by selling into that state. So now companies have to collect tax in more states if they have consumers in more states that are buying things. And so you'll see the orange box in the corner talking about all 45 states that have a state level administered taxation, all have adopted economic nexus. But of course, here in the US, nothing is gonna be the same across all the states. We define things differently, we tax things differently, which of course means that we're gonna have different laws and rules out there. So this map kind of brings that to life. And so you'll see on the left-hand side that there's really two different criteria that states have used in this economic nexus world that we live in today in the US. First off is the dollar amounts of sale into a state. And so you'll see 500, 250, 100, but essentially a state saying, if you sell X amount into my state, you have to start collecting tax within my state. And if we're talking about 100,000, I mean, that's only an average of 8,000 per month. So it doesn't take much to cross these thresholds. But you'll see those states in blue actually have a second level of granularity to them. And it's the idea that they're looking at transactions. So a transaction means a unique sale into the state. And so if you look at 200 transactions, but averaged out over an entire year, you're talking 16 transactions a month. So these can be low dollar amount, but they can also be plentiful enough that you may still need to go register in those states. Now, as far as the dollar amount, of course, states aren't going to look at the same thing. So some of the states are going to only look at your taxable transactions. Others are going to look at your taxable and then also include any kind of exempt or non-taxable transaction. And what I mean between those two, exempt because of who you sell to. Think of resellers, distributors, nonprofits, government agencies. You're not putting tax on it because of who they are, what they're going to do with your good, states are going to still count that. Other states are going to say, I don't count that. We think about non-taxable, think about the nature of what it is that you are selling. The state says by the nature of that item, it's non-taxable. Some states are going to count that, other states are not going to count it. So you can start seeing this granularity that you have to look at your sales across these different states and look at all these different thresholds and marry it to the different ways that you sell into the state. What do I mean by that? So let's take a look at an example here. So this company is selling into Michigan. And so they have a little bit of web sales, they have some store send sales, they also have a little bit of marketplace sales, they also have a little bit of social selling, which we'll talk about later as well. But the idea is that you're advertising through the socials, so TikTok, Facebook, what have you. And you'll see that this revenue isn't very high. And these are annual numbers, 40, 20, 55. And the transaction counts certainly aren't high. You're talking 70, 50 for an entire year. But when you add them up, not only has the 115 crossed that 100,000 threshold, but the 230 has certainly crossed over the transaction threshold. So when we think about when you are selling, we want to think about, do my marketplace transactions count into it? How am I looking at my sales in store, also online? And when you bring all these together, you may very well find that you have to collect tax in more states. So maybe historically you just sold through web and store, but by adding in the marketplace sales, now you're crossing these thresholds. And of course, once you register in it, we'll talk more about this later, you have to go figure out all the rates, rules, everything else, and how that state applies taxation for the things that you sell. And of course, doing this all in real time for your customers as you are selling online, in store, or taking call-in orders or what have you. So all these numbers can add up pretty quickly and pretty easily for companies to have to collect tax in more states. All right, so now that we're thinking kind of holistically that, there's more states, there's more things that you may need to collect in, now let's kind of drill into some of the channels I was talking about. And so these are some of those things that were called out a moment ago on that Michigan example. So let's first off think about marketplace. So if economic nexus and this Wayfair decision is what I commonly talked about, 2-3 years ago, marketplace facilitation has been a really hot topic over the past 2 years, but certainly over the past, COVID era, and what that means for companies in trying to sell through more channels. There's states that have passed rules saying that marketplaces need to start collecting tax and remitting tax on behalf of the sellers through them. And this is passed in most states. But keeping in mind that when you sell through that marketplace, what you do with that information is also going to differ for different states. Some states are going to say, you know what, the marketplace is already paid, we're fine. Other ones are going to expect you to aggregate that information in with your sales and include that as far as your gross sales into a state. Maybe when they look at the transaction counts, maybe you have to call out in the return what the marketplace has already remitted on behalf of you to make sure that you're showing your total sales into a state. This has already been remitted and this is the amount that's still due for us. But essentially, the idea is that there is no uniform rule as we look across these different states. So when I think through that, as you're bringing the information in, how do you handle that? And it's also quite common that companies are selling through multiple marketplaces. So number one, you have the bigger marketplaces. And so think of like your Amazons, eBays, Walmarts of the world. But there's also a ton of small marketplaces. And it is really, really common that companies are opening up their own websites to represent more products on their sites than they have historically. And then there's kind of ways you can approach as a drop shipper or as a true marketplace. But it amazes me how many companies I talk to that have actually really expanded their websites to being a marketplace. And we have lots of these smaller scale marketplaces existing out in the world today. Okay, so marketplaces. A huge way that companies have gone after more customers, and again, all of those dollars that were tied to those customers. And I think commonly when companies think through, hey, I have to register in a state and start applying tax on orders to the state, people don't always think through the exempt side of the business. And this is actually a really hot topic too. So number one, maybe you've been selling across the US for years and years and years, and you have lots of business you've been selling to. The fact is you never had to go get exemption certificates. Maybe it's a distributor, reseller, a manufacturing, research and development. Maybe it's a government agency or a nonprofit. Maybe you've been selling into New York for years, but you never had to ask for certificates because you were never registered in New York. And so first off, as economic nexus now impacts you and you have to go register in that new state, like New York in my example, now you have to hurry up and go get certificates from all of these customers. Now, on top of that, what happens when that customer places an order? You don't have the certificate yet. Expectation is that you're putting tax on these orders, but again, you've had a long relationship with them. So what do you do? And on top of that, I work with a lot of businesses that are opening up B2B portals. And so over the past couple of years, if you have a heavy B2B element to your business, you want to take orders in. Maybe you don't want to drive that through your normal e-commerce site. And so many times you're setting up separate, places for them to submit their orders. Well, how do I make sure that I have the right certificate for that company and apply that all in real time in that B2B portal where I'm taking those orders in? On top of that, what happens if that company is asking me to now ship to another state? So kind of that drop shipping scenario, which comes up quite often in multi-channel. So maybe it was easier back in the day because you were only in a few states, and maybe that company that was shipping product out to you was only in a few states. But as you register in more states and they register in more states, there's just more certificates that come into the mix, and you need to make sure that in real time that you have the right certificate and it's being applied in real time for those orders that are coming in. And when we think through kind of ramping up and understanding what certificates you need in these different markets, I think it's important to call out that, these states can have 20, 30, 40 different forms, and all the different types of reasons somebody may be exempt, whether it be, agricultural or maybe a reseller. There's different forms that go with it. And there's different expectations around what you do to certify that document when you get it. So there's a huge effort kind of ramping up your staff and making sure they understand what should be on that form. Well, what form should I get? What should be on that form? And making sure that you have a legible, clean copy that's going to hold up an audit. And on top of that, what happens when, in this day and age, as M&A and more things are happening out there, what if you have a certificate from a company and maybe it's expired or maybe it doesn't apply in the new state and you're not putting tax on those orders, but then they get acquired and now you want to try and get a certificate from them because you're under audit and you may not be able to get those certificates. And so there's lots of things to think through that as you are in more states and you're talking about more B2B orders, how do I get the certificates? How do I make sure that I'm not applying tax and having to do the refund and credit later from getting that certificate from the customer? And then also just what the experience is for them. I want to make sure that my B2B sales have a pretty smooth and easy process to place those orders. So in summary, thinking about economic nexus, but for the B2B orders, making sure that I have the right documents, and also it can be applied all in real time where I'm either allowing them to place orders or also where I'm doing invoice and order fulfillment, kind of a back-end ERP or what have you. All right, so let's talk about e-commerce and website. And so keeping in mind, kind of going back to those earlier numbers I was throwing around, when you have, 200 transactions for a year, only equaling 16 transactions per month. In this example here, Lisa has a pottery studio. And so she has a website, and she's not limiting who can buy what on their website. She allows anyone that wants to buy her pottery to place an order. And so all of a sudden she gets very popular in New York, and all of a sudden there's a bunch of orders coming in from New York or from a different state. Now all of a sudden she has to keep track of these orders and make sure that she's going to be registering and applying tax going forward in those states. So she ships into all 50 states, which means she may need to register in 10, 20, 30 states pretty quickly. So poor Lisa with her small pottery shop is now tracking tax in 30 states. And this is really, really common for companies in the current state of affairs that we are in today. All right, fulfillment and drop shipping. So let's think a little bit about fulfillment. So this is going back to that earlier idea of fulfillment by Amazon or a different warehouse location. So maybe you as a company want to keep localized product closer to where the customers are to allow faster ship times, lower shipping costs. And so all of a sudden you have product that is distributed across the US, and thinking about that where that is located, that may need to collect tax in more states. And then if you're dealing with an Amazon, for example, they have the ability to freely move those product between different warehouses. So tracking where your product is and keeping in mind that while that product is sitting on the shelf, that may mean you have an obligation to collect tax in that state going forward. Drop shipping, again, to make sure that we're all on the same page, the idea here is, you as a seller have a customer come to your website, you sell it to them, you then place an order with another company and have that product shipped directly to the consumer. So again, this is getting more and more complicated when we talk about more companies having to collect tax in more states. So if you are selling to that individual, you may now need to charge tax on that order. And then if you register in that state, you have to get that resale certificate and provide it back to the drop shipper. But let's say you have not yet crossed the threshold in that state. So you're not registered, so you're not applying tax to that individual, but you then place an order with a drop shipper who has crossed thresholds because they've sold enough into that state that they're now registered in the state. So they're going to try and charge you tax unless you can provide them an exemption certificate. So some states have unique rules for drop shippers where you can use your certificate and applies in the state. But lots of states say that in order to get that exemption certificate, you have to register with that state to charge tax on the initial sale. So you may very well find yourself far more often dealing with the fact that you may not be charging tax up front, but you're getting invoices from your drop shippers with tax on it, and you don't have the ability to give them a certificate to not be charged tax. And so you're selling without tax, but you're then being charged when you buy something. And so we're also seeing a lot of companies that have adopted a wider range of drop shipping over the past couple of years start register in more and more states to make sure that they can not be charged that tax. But that also means that you're charging tax on more orders up front, having to deal with the filing and everything else that goes with that state. So thinking through, not only where my product is, but also where I'm asking things to be shipped from, and what does that mean for my company as far as tax policy. Affiliates and social selling. So the idea here is that you are paying someone, well, either you are selling directly on social sites, and so you have ads that are running in Facebook or any social media, but also affiliates. And so this has actually become pretty common, more so lately. But the idea is that if somebody is promoting your product and you're paying them a commission for that, that these can very easily create, for the affiliate, they're acting as an agent of your company when you're paying them commission. So many states may say that creates a Nexus obligation for you. And then social selling, again, making sure not only click-through Nexus rules are being applied, but also taxes being applied when you're taking those orders in. And so this idea of click-through Nexus and affiliate Nexus was something that was a new topic, quite a few years ago, but we're actually seeing it become very relevant right now as more companies are trying to sell through multiple channels. Again, going back to that multi-channel challenge that we're talking through here today. And of course, opening offices or opening locations. And so I've seen a lot of companies redistribute offices. And so maybe right now with what the landscape is out there for where locations can be, maybe you're closing locations and opening new locations in better locales or cheaper rent or what have you. I've also seen an uptick recently of a lot of pop-up shops. So this was very relevant a while ago, kind of went away, and now is very much coming back again. So you as a company may only open up a temporary store for a 3-month span. Maybe you're also, I've seen vending machines again recently. We have some pretty large name companies that are setting up vending machines in a mall or so on. And so the idea is I don't have to pay for staff, but now it's a physical location that you are establishing, and there's just tax implications that go with that. So as kind of called out here, Davina is looking to expand to other markets. And so number one, trying to figure out how do I get tax in the store for those local markets? But what if what I sell is involving with send sales? And so trying to figure out all the, beyond just the tax rates where I'm opening these locations, but also how do I handle all the tax complexity that's going to tie into these new locations that I'm setting up. And we're definitely seeing an uptick of that throughout 2022 and going forward. All right, I told you earlier that I'd get back to this, and this has been a really intriguing topic for me of late. So number one, the idea of you having employees in a state has always had the obligation or had the requirement if you have to register. But many times companies had a pretty strong policy about where their employees were, and maybe it was an exception that they were hiring a development resource, somebody else within a state. But over the past couple of years, with so many workers being remote, we saw two things happen. Number one, companies really opening up, and especially with kind of the hiring market that we saw, where it's kind of hard to find the specific talent you're looking for, we saw companies really open up their policy and start hiring all over the world or all over the US and allowing that remote work. But maybe as HR brings that person on, maybe they're not telling accounting and finance that, hey, we have to go register for sales tax compliance because we just hired, I don't know, Danny in New Jersey, and we were never in New Jersey before. So there's been kind of this catch-up period of accounting, knowing where employees are based and what that may mean for us to have to register. And the other intriguing thing that we've seen a lot is just the reallocation of people. So I know we've certainly seen in our company that, hey, if I'm going to be a remote employee, I'd prefer to go be a remote employee over there. So now I'm in the state of Washington. I'm based in Seattle. We saw a huge movement of employees up in the small towns and the mountains and kind of moving out of the larger cities, because if I was going to be remote, I want to be remote where it's beautiful, or I have a stream in my backyard. And so what you may see is that you have currently established employees over the past couple of years have redistributed across the US, and now they're sitting in Utah or Idaho or Kentucky, and you never had an employee in these states before. And now again, you have to kind of make sure that you're clear with HR where your employees are based today, because that may very well mean that you have to go register in more states. Again, going back to that original idea of Nexus, you have a person in a state, but you may not know that your employees have moved sitting on the accounting and finance side. Fascinating. All right, international. So if you are going to sell and you're going to open up your website and sell across the US or sell around the world, it's becoming really common that you have to deal with more international tax compliance. And so whether it's a GST or a VAT or a consumption tax, whatever that country administers, we're seeing more and more multi-channel sellers having to collect this tax. Now, this idea of a economic threshold is a pretty new idea here in the US, but it's been well established around the world for a long time. In fact, we've seen countries over the past couple of years actually lower their thresholds down, Australia being a common example. But when we think about you selling into these different countries, now you need to start collecting their tax. And so some of them are simpler, some are more complex, but irregardless, it's a new approach to tax that you need to think through and truly understand. And many times you have to do this where the customer's interacting with you to place the order. So your website or wherever they are placing an order, many times now you need to show that VAT or GST. Now let's also talk about duty, because this has also become extremely common. So as you are shipping into countries, there is a duty that applies to those items many times, again, depending on the dollar value of what it is that you are selling in the country. And what companies don't want to do is not charge duties or estimate duties up front and let the actual delivery company have to account for it. Number one, it's expensive for you to have them do that service. And then number two, that's not the customer experience that you want to present. And so we see quite a few multi-channel sellers now looking to try and estimate or collect duty upfront from the customer to make sure that they really understand the total cost of having that product delivered to them in that country. Now, in order to get the duty correct, because as you may or may not know, duties vary wildly between different countries, and it's very much a way that a country is going to promote the things that they want to be brought into the country or things that they don't want to be brought into a country, to kind of make sure it's not competitive with what's being manufactured or produced within that local country or local market. And so making sure that you classify your things correctly is extremely important. And so there's an HS classification. So basically there's a long code to identify the thing that you are shipping in the country, and the duty is very much tied to that code. And so making sure that you have the code correct for that country, keeping in mind that the beginning of that code is going to be universal, but the ending of the code is very country specific. So if you are selling shoes into a country, whether those shoes are athletic or leather or what have you, can all have big implications on what the actual duty rate is that applies to it. So when I'm looking at selling internationally, again, I opened a website and people are placing orders all over the world. I need to think through, how do I get it to them? How do I present tax? Do I collect tax? Do I have to register in that country? What's the duty? How am I going to calculate and estimate that for the customer? How do I classify my items? And all of a sudden, the idea is that when as more customers are buying online, you're selling into more countries, into more regions, these are things you really need to think through and make sure that are understood. And many times it's desired to be part of your e-commerce experience. And that can be very challenging for a company to try and figure out, how do I classify my items? How do I present duty? Especially if you have a wide array of products that are on your website. If you sell lots of things, or again, if you have a drop shipper, so you have a lot of items that are on your website, other companies are shipping, how do you handle that? Because again, you are the one selling to the consumer. So many questions. And again, this is a really common challenge right now for multi-channel sellers. So there are some things out there that are making things easier for companies that are selling internationally. And so let's talk a little bit about the OSS. So the idea of MOS, the mini one-stop shop, has been in place for a long time. And that was really the idea. If you were a digital seller, so think about you're selling apps or downloaded or SaaS products, that you could register as part of the MOS program, and all of the EU member nations were part of MOS. And so you would have to collect tax in all of the member nations, but you only have to do one return in one country. And so historically, companies chose the UK. After Brexit, a lot of companies are choosing Ireland. But essentially, you could do one return through MOS, and then that country would then distribute the money out to all of the countries. Well, they've taken that logic for companies that sell physical goods. And so the OSS that launched, middle of 2021 was this idea that you would register in all of the EU member nations as part of the OSS program. But when it comes time to do a return and hand the money over, you can do one return and one payment, and then they then distribute the money out. So this makes it far easier for you to sell it throughout Europe and not have to do a German return in German or Italian return in Italian. You can choose one country, do that one return. But that also means that you need to start collecting tax in all of those EU member nations as part of the program. So how do you present that tax, and what is that customer experience like now? So there's some really nice things to help simplify that process, but now you're talking a bunch of countries that you may not have been tracking historically if you choose to be part of that program. So now let's think about what are the steps for proper tax compliance. And so I'm going to be mostly focused here on the US, kind of rein this back to a US discussion. But essentially, there's about 5 different pieces that we want to think through. So number one, we want to think through, where do you need to register? So understanding how your business operates, where your employees are, where your product is being sold, how you are selling, understand where you need to register and act as an agent of that state. Number 2, you then have to go establish with that state or with that jurisdiction. Once you have registered with the state and now you're going to collect tax on behalf of that state, you have to calculate it. And thinking of calculating across all the different channels, obviously tracking all of that information, but also tracking all the exemption certificates for your B2B business, and then obviously filing with that jurisdiction to hand the money back over. So let's unpack these 5 here for a little bit. So number 1, knowing where your business must collect and remit tax. And so again, we talked a lot about this earlier, about the physical nexus and the economic nexus, the aggregation across the multiple channels, whether it be e-commerce or B2B portal or marketplaces or in-store. But essentially knowing all of these pieces and where do you need to register within these different jurisdictions. And this can be a pretty heavy lift because, again, as I mentioned, you remember with that map with all the different colors, there's just different rules in the different states and what they expect for you. Now, once you know where you need to, then you need to go register with that jurisdiction. And I think it's an important thing to call out here is, in general, when you're registering with a jurisdiction, they will always ask the question kind of like, why now? So why are you starting to collect tax and registering now? And why did you not do it last month or last year? And so making sure that you have a pretty clear understanding about, why you need to register now. But the fact is, if you needed to register before and had not caught that, because maybe you had a remote employee move there last year, they didn't move there today, they moved there last year, that you might need to do an enhanced registration up front where you may owe some back tax for that period. There might be some penalty interest that comes into that. And in fact, if you are looking at over a longer period of time, or if there's a lot of money, you may want to start looking at a VDA process, which is a voluntary disclosure agreement. So a third party on behalf of you reaches out and helps say, hey, I have a company, this is the scenario, they would like to register, they will pay back taxes, will you waive penalty and interest? And if the state accepts it, then we kind of marry the name with the state. As long as they had not been found yet, no surveys have been sent out to them, then many times they can take a strong benefit of that. So thinking through that when you register, that is it okay that I register now, or should I have been already registered within a state? And if so, what is my exposure and what do I need to do for to properly protect or limit the exposure for my company during that process? But now you're registered. Now I want to think through applying the proper tax. And so let's start out and kind of, when I think about collecting tax, I kind of call it, you have to look at the who, what, and where. Who am I selling to? What am I selling? And where is it going to arrive at a tax decision? So as far as the where piece of it, just looking at the US, we have over 12,000 different tax jurisdictions. So you have state level, you have county, you have county or parishes, then you have cities, And then you have lots of local taxes below that, special taxing jurisdictions, transit authority taxes, stadium taxes, local improvement, cultural taxes. There's lots of different layers to this. In fact, sometimes you can be selling to a customer and there can be 5 or 6 different taxes at the residence where they're located. And it becomes very hard to try and understand what rate should I be applying. I think historically, a lot of companies say, well, I can get a zip code file for rates. And the idea there is that, there's a postal delivery code, like a zip code, and I can tie a rate to it. I can even get a 9-digit zip code file, a little more granular. But if we look at zip codes, 42% of those have multiple tax rates in them. So how do you know which rate to charge within that zip code? And it really goes back to the idea that zip codes are for delivering mail. It has nothing to do with sales tax. And so kind of the overlay of addresses and rates, and people say, hey, if I use a zip code, I can get closer, but it doesn't get you there. And in fact, it's quite common, as I mentioned earlier, you can have businesses side by side with different tax rates. And if you get that wrong, the company, the customer will absolutely let you know, which again is not the customer experience you want. Or worst case scenario, they're online, they see you charging a higher sales tax than they should be charged, so they abandon the cart and go somewhere else and go buy from someone else. So thinking through the idea that I have to make sure I get the correct rate for where the customer is extremely, extremely important. And kind of that last piece of it is there's different technologies in play here. So it's not just your website, but maybe you also have a CRM like a Salesforce or so on, where you're doing estimating for customers out of. You have a back-end system, so you have an ERP or something else. Maybe you have a point-of-sale system for in-store. All of a sudden, you have to make sure that all of these things are getting the same tax decision correctly. And that can be a pretty big challenge for companies trying to think through, how do I make the correct tax decision, but still allow a very smooth and quick customer checkout, because you don't want to hold up that experience. So if that's the where, let's also talk about the what. So many examples here. The idea that by the nature of the thing that you are selling, it's taxed differently in different jurisdictions. And so I'll call out donuts in the middle of my screen. So if you want to sell 4 or you want to sell 6, you tax them differently. You have a rack of candy bars and you have a Reese's next to a Kit Kat. One's not taxable. Kit Kat is taxable because it's got some flour in there. All of a sudden, there's these very weird rules that are in state by state. So maybe the state you've been operating in never looks at the number of donuts that you sell, but now you're selling into a state and you're shipping donuts in, and now it matters that you have to start looking at this complexity of how many I sell will change the taxability of the item that I am selling. So there's this layer of thought that a company has to go through, that when I am selling something into a state, maybe it's stuff I've sold for a long time, but because I never registered in the state, I never had to go research, understand how the state taxes this item. And there's a lot of complexity between states, I'll just say that. So now that you've collected the tax, again, going back to the who, making sure that you have the correct certificate from that customer, because the idea is that when you are registered with a state, you are putting tax on an order unless there's a reason that you don't. And so by the nature of what you sell, I don't have to put tax on it, or who I'm selling to, I don't have to put tax on it. But if you are not putting tax on it because of who you are selling to, you have to have a document that is acceptable in the state's eyes, that for that time period that you are invoicing, that holds up under audit. So thinking through that, if I'm selling B2B and I have exempt organizations, or if I'm selling B2C and maybe I'm selling to farmers or tribal or diplomats or other individuals that may be exempt of documentation, how do I collect that? Especially if I have an e-commerce experience for my customers, how do I collect that through a website? Once I have that on file, how do I make sure that I exempt that customer's sale the next time they place an order? But if they're sitting in New York and they're asking me to ship to New Jersey, the New York certificate may not apply in New Jersey. So how do I know in real time to make sure I get that New Jersey certificate for that customer for where things are being shipped to? And there's a lot of this complexity that starts coming out when I have a customer who is exempt. How do I get the document? How do I apply it and make sure that it's acceptable for where items are being sold to? And of course, all of this is to protect your company, because if you come under audit and the certificate doesn't hold up, you're responsible for any tax on those orders that you didn't charge. And so you have to either try and get that tax from the consumer or get a new certificate from them. And all of a sudden, we're spun very quickly trying to get new certificates to limit exposure of your company, whereas making sure that you get these up front is extremely important. All right, so now we've collected the tax. We've been looking at the who, the what, and the where, and applying that tax correctly. Now it comes time to actually file. And of course, this is different in every state also. So how often you have to file, you'll see kind of called out in the first point there in blue. There's still jurisdictions that require a paper return, paper check to be cut to them. More and more move toward online, but just because it's online doesn't mean that it's easy. I know when I first started in this industry, I was given a California return and said, here, you have a day, go do it. And I nor anyone in my group could get through this in one day because it was so painful, trying to really understand what needs to be on this form, how it's going to be presented. And so each of these states are going to have a deep level of complexity you need to understand. They're also due on different times. And so some states are 15th, they're 20th, they're 25th, their last day of the month. And now all of a sudden you have this cadence where you were in 1 or 2 or 5 states and you knew those states, but you had 5, 10, 20 more. And now all of a sudden there's all different forms on all different dates that are due. And it becomes a huge involvement for time to make sure these things are all filed on time. Again, if you miss it, the late payment fees can add up pretty quickly. And then how you pay them is going to differ also. Oh, and I'll call it the prepayments too. So a lot of states will say, hey, as you sell over a certain amount, I don't want to wait for the return to get my money. So I'm expecting prepayments before that. And so now all of a sudden you have to set up these prepayment schedules. And again, it gets pretty complex to just hand the money back to the state that you've collected. All right, so if those are the 5 pieces to think through how to be compliant, where do I need to be? Establishing appropriately, collecting the proper tax, having the right documentation, of course, filing. Obviously, Avalara can help across those pieces from both the initial understanding of your business, helping you establish application of tax, document management, and of course, the automation of filing of returns. So let's unpack this a little bit more about how we can fit into this, because in general, what I help companies do all the time is really streamline and improve their sales tax management. So what are things that companies want to think through when they're automating? So number 1, integration is huge. So I want to make sure that if I have an e-commerce and I have a CRM and I have an ERP and I have a point of sale system, I want to make sure that they're all speaking the same language and applying the same tax. And I want to make sure that as you look at a tax solution, that it plugs in easily into those different solutions, because I don't want to have to build custom integrations, all of these things. It would be great if I had pre-built connectors, or even if it's already included in some of those technologies. Thinking about cloud-based, you don't want to have to run updates. And so things change all the time. Rates are changing on a regular cadence every month. We have product taxability, things like tax holidays, where over a certain period of time, things become non-taxable. But at the end of that, at midnight, they become taxable again. But like trying to have all of these updates that you're running in a technology, it doesn't make sense. So we've certainly seen a movement across the industry toward cloud-based solutions where it's always the accurate rate. You're just connected and you always have the accurate rate information flowing back and forth. You'll see in the middle of that second box the idea of, again, calling out, figuring out where the customer is located, very specific to their location, kind of doing a geolocation, or we use lat long. So we will actually drop a pin on a map and make sure that the taxation is based off the physical location, not the postal delivery zip codes. Scalability, certainly as you grow. But I will mention that, I've seen companies certainly scale back and kind of reapproach a market or reinvent themselves. And so making sure that as you look for a tax engine, one that will allow you to easily grow, or if you need to resize and then grow again, that it's going to do those things for you. That second bullet in that box of watching watching the Nexus thresholds out there. It would make sense for you to have, with all those different rules in the different states, to make sure that your tax provider that's plugged into your technologies knows those different rules in those different states and is watching your sales across marketplaces, across point of sale, across e-commerce, and making sure that it's kind of called out to you when thresholds are being crossed in new states to make sure that you're registering appropriately. And the B2B side of it, making sure that I can capture certificates from customers, put them on file, and then it's all applied in real time in a digitized way. And so I don't want them to have to mail it to me or email it to me and then call customer support and us to try and put it in there. A lot of companies are looking for a way to automate and make that part of the checkout process instead of being an after the fact, or again, I charge them tax and they send it to me later and so I have to refund and credit. Like making that a smoother experience for the B2B side of my business is a huge focus for companies. So when I think about figuring out tax, we kind of call it the sub-second challenge, but essentially realize I mentioned earlier, when we talk about e-commerce, you want a customer to come in and buy something in a smooth and easy manner. We don't want to hold up. None of us love the little spinning wheel. And there's lots of studies out there that, the longer that customer waits, the chance of them abandoning the cart or walking away from the experience goes up dramatically. So it's almost like every millisecond counts to make sure that it's going to be a smooth experience for your customer, especially if you're in a world where there's a little bit of an impulse buy. You want them to click buy and you want to capture that sale then and there. So what are things we think about? Customer clicks purchase, you want to think through the address. And so Avatax, being tied in technology, can actually validate and normalize that address for US and Canada, which number one helps make sure that you get the correct tax, but also helps you make sure that you have a good address to deliver that product to. There's different sourcing rules. And so if it's coming from within the state versus across state lines, there's different rules. There's a tax based on where it comes from, where it goes to. And some states even have a hybrid of those two, where it's part origin and part destination, depending on where it is located, where the customer is. Making sure, again, you have that proper rate for that location. All the different rules and regulations are applied. Did you check that certificate and make sure if there is a certificate on file for that customer, that it's applicable for where the product is being shipped to and the date that they're placing the order? The thing that is being sold, as I mentioned earlier, you have the two different things that are next to each other. One's taxable, one's not. Are you capturing the proper taxability of those items? Then, of course, we're thinking through and presenting that tax holiday. So over this weekend, is the thing non-taxable, whereas maybe historically it was? And then make sure that that tax is shown appropriately to the customer upon checkout. And so Avalara does all of this in well less than 1/10 of a second. And so again, you want to make sure that as you're looking for tax automation, that you can handle all these different pieces all in that real-time experience for the customer, irregardless if it's in a point of sale system or if it's in e-commerce. So I will step onto the idea of, how does Avalara fit into this? And so Avalara has got a wide array of numerous products helping around the world in numerous ways. But for the US, there's kind of three main pillars. So Avalara Avatax is our tax determination engine. So this is a cloud-based solution that you can set your tax policy and then plug your different technologies into. And I love this idea of kind of a wheel where the hub of the wheel is Avatax. You set what states you collect into, who your customers are, types of things that you sell. And then the spokes of the wheel are going to tie out the different technologies. So I have one website, or maybe I have 3 websites. I also have point of sale systems. I have Salesforce as a CRM. I have an ERP. So making sure that you are presenting the tax appropriately across all of them, setting that policy all in one place, which Avatax certainly does. Now, as far as the exempt customers, sitting alongside of it, we have exemption certificate management to make sure that not only you have the right certificate, but also allows you to easily get those, manage them as they expire or they're missing, or you're adding new states, be able to reach out in an automated manner and get those new certificates, and allow a very easy customer experience for your customers to supply those certificates to you. And then finally, of course, there's lots of information from the government, whether it be rate, rule, boundary changes, but certainly when it comes time at the end of the month and we need to do those returns, the information will be harvested from Avatax and populated on those returns. So you can approve the returns in your dashboard, and then we go do that work for you. Last year, we did over 4.1 million returns across the US here. So huge infrastructure to make sure that we're communicating with those jurisdictions, but also that things are being done on the right form, in the right way, at the right time for that peace of mind for our customers. So we can help with calculation, we can help with document management, as well as the returns filing. So we're going to end here with some question and answer session. And so I will hand it off. So please feel free to post your questions in chat or in the question section. Thank you all for your time.
Thank you, Jeffrey. Really appreciate the presentation. And as a reminder for everybody, in the handout section at the top of the chat, if you click on that, you'll be able to download a version of Jeffrey's presentation for your own resource. And with that, we've had some great questions that have come in. And once again, if you have any questions that you want to ask, that you want answered today, please submit them in the chat box over to the right. First question we have is, does Avalara work with Celerant's solutions?
Yes, I can take that one, naturally. So as I mentioned earlier, we've been partnered with Avalara for many years, probably over 10 years. And so we integrate with Avalara to a lot of our different software platforms. Those include Cumulus Retail, Stratus Enterprise, and also Command Retail. Worth noting too that we have integrations to our point of sale. We also have integrations to our eCommerce. And so you can integrate to one or the other or both.
Okay, great. And with that, is there a cost on the Celerant side to integrate to Avalara?
Right. So good question. So we don't have any recurring fees. There's nothing that's ongoing, even if you're a SaaS client, software as a service, but we do have an initial, just a setup fee. So if you're interested in integrating with Avalara, you would reach out to your sales rep. If you're not sure who that person might be, you can reach out to me or just send an email to marketing@celerant.com and we can help. But ultimately, you would just reach out to your sales rep and there's a small setup fee. And then after that, there's no charge on our side to integrate and hook up with the automations
Okay,
out
great.
there.
Thank you. And then Oliver, this looks like for you. Do I charge the tax rate of the state I'm in or the state I'm selling to?
Good question. And Jeff covered this in his presentation, so it might be a good one just to review again. But generally speaking, if you make enough sales to a customer in another state and trigger that tax obligation, you'll need to charge the tax rate for the address you're shipping to. Not all states follow that rule, of course. Jeff mentioned, all the states are a little different. And different states have different kind of sourcing rules that need to be addressed when you set up your tax strategy. So that's something we can help with at Avalara. So if you have any questions, if you're a current user of Celerant and Avalara, or if you're looking to use Avalara through Celerant, we will have our team reach out to everyone today via email as a follow-up. And please use that outreach as a way to ask questions, talk through your tax scenario, and our team can help.
Okay, great. Thank you. Do I need to file a return for online sales?
Similar to that last one, maybe. So if you've triggered that economic nexus in that state where you're selling online, then you need to register and then collect and remit sales tax and file a return. Very similar as the previous question. We'll reach out to everyone today and kind of talk through that scenario if it applies to your business.
Okay, great. I think along those lines too, we had a question come in from Linda who says, other than her website, she only sells through a gun broker, which is a marketplace. So the cost for her small business with 40K a month sales and mostly her home state, how does that, I think it kind of goes back to the economic nexus rules. So how does that work for her?
Yes. It's going to rely on economic nexus depending on the state. You might also check with the marketplace you use to see if they're handling the sales tax or not. Some do, some don't. And that'll kind of help you understand, if you need to worry about it, if the marketplace is taking it over for you on your business's behalf.
Okay. And then with Avalara, what is the pricing structure?
The pricing structure is typically transaction-based. So depending on how many transactions you're doing, and then also that's for the tax calculation. And then we also provide other solutions to help with those exemption certificates, returns. If you're selling software or things of that nature, we can, kind of help you figure out which products from the Avalara side you'll need, and obviously have that conversation of the pricing. But fundamentally, it's typically transaction based.
Okay, great. Thank you. Looks as though that may be the questions for today. So as we wrap up, what are some final words from Michelle and Oliver?
Well, from me, I have to say I'm still surprised to see about the candy. and how one candy bar gets taxed and one doesn't based on flour in the particular state. But I mean, it's just a great example of how complex these rules and the laws become. And it's very difficult for any retailer to manage this, and especially when you're doing significant volume with your e-commerce site and hopefully shipping to all different areas and all different states in the country and within different states. So having the ability to just hook up with Avalara and have this automation and have it through our software is just a huge, huge benefit. So anyone who's not yet working with Avalara, we strongly recommend that you do so. And we have a webpage, Celerant.com/Avalara, that you can learn more as well. And there's a form on that page too. So you can fill that out. We can have your sales rep follow up with you, and we can answer any questions one-on-one as well.
Yeah. And thanks, Michelle. And just to add on to that real quick, keep an eye out for the Avalara team at Celerant's user conferences coming up this year and next year. And also, like I mentioned earlier, keep an eye out for an email from my colleague, Sean Bergeson. Maybe you've met him out one of these events before. I've talked to him on the phone before, and we'll help kind of walk you through all those tax scenarios, answer the questions you have. Think of Avalara as like your tax compliance helper. And so, yeah, looking forward to it. Thanks everyone for joining today.
Appreciate it. Well, thank you to Jeffrey, Oliver, and Michelle for talking with us today. And thank you to Celerant and everyone else who joined us. Don't forget that we will email you a link to watch this presentation on demand in the next 24 hours. Also, be sure to download the presentation slides if you haven't done so already. Thanks again, and we will see you in a future webinar. Thanks, everyone.
Thank you.
Bye all. Thank you.